May profits be upon you. Welcome to another weekly Forex forecast. We're looking at the US dollar index. And probably, what I'm going to do is I'm going to look at all of the majors. Euro USD, Pound USD, Aussie dollar USD, New Zealand dollar USD, USD CAD, USD Swiss, and the USD JPY. That's what I'm gonna do. All right, and we're gonna start off with the US dollar index. But first, the economic calendar. What are we looking at? Monday, we have no red folders, so be careful trading on those days. Without news drivers, the market gets a little wonky, and sometimes those uh, sweeps of liquidity and the fair market value, fair value gaps, and you're looking for retracements and stuff to work out, and sometimes they don't because there's no news drivers to inject that fuel into the market, that liquidity, that volatility. All right. Friday, we also do not have any red folders. All right. But a very key one, Tuesday, for the US, there's core CPI that'll let us know what the state of affairs are with regard to inflation. Very important market mover, and it has the power to reverse market. So be very careful trading on that day. Lots of volatility, lots of potential volatility. Now let's look at the US dollar index on the weekly time frame. What have I been saying for the longest? If I can get this going here. All right. What I've been saying for the longest. All right. The market is in a what do you call this thing? A ascending channel. All right, making higher highs and higher lows. And ever since it got down here, I told you we was going to spend some time down there because look at how long we spent here and look at how long we spent down here. If each candle's a week, we've been down here for a couple of months, a few months here. And we are here several months as well. All right. But I did mention while others were saying something different, once the market breaks this fair value, the structural point, as we make lower lows and lower highs, said when we get near to this support line of the ascending channel, there's a good chance that the market would turn around. And it looks like that is still happening, even while it was coming down for week after week after week after week, coming down, and people were thinking, yeah, we're heading towards these lows. I heard them. I heard the gurus on the YouTubes and the rest of them that yeah, we're heading down to these lows, and the markets are bearish and la la la. I said, not so fast, because I believe this. Once you hit this low, once you make a new lower low, this becomes our external point when you break the high of that caused that low. You understand? That is a structure point. When we break the high that caused the lowest point, the swing low, when you break that high, uh, there's reason to believe that the market is shifting from a bear to a bullish market, a bearish market to a bullish market, a market structure shift. All right. The closest we came was here. All right. That's not a break, folks. All right. That is a liquidity sweep. All right. And that doesn't say the market is definitely trending up. When you get a break and a close above those highs, that's when you know the direction of the market is changing. When it sweeps, it indicates it's a bullish indication, but it also says the market still has business to take care of down lower. And we got a pullback into this uh, bullish leg. We got that pullback, and I said, hey, when the market was down here some weeks back, a couple of weeks back, I was saying the market's down here, but this is in correction territory. What am I talking about? Correction. The market moves as a higher high, higher low, higher high, higher low, higher high. Each one of these is a correction to the last impulsive move up. Impulse, correction, impulse, correction, impulse. And that correction comes to OTE levels. All right. We'll get into that another time. But this push up, I said we are in correction territory. And this is the correction I was looking for last week. Last week closed very bullishly after a bullish weekly close prior. The previous weekly close was bullish. We gapped open. You see that gap? All right. The market closed here. We opened here last week and we pushed up higher. The market came back to trade back into that weekly open gap and pushed up higher, and we broke this high. Why is that high important? Because this is the last low. This is the fractal low, all right? Because it has a higher low on either side that makes it a fractal. And this is the calling sign for the markets to move in the other direction. All right. Once it closes higher, a higher low, you expect a higher high to happen. You understand? That's a reasonable expectation. We went past that down close candle, close well above it. This becomes an order block, folks. And I'm looking for the market to either retest and push up higher or to fill in a fair value gap and then go up higher. Let's see. Let's go down to the daily. All right. I hope you're keeping up with me. I'm running a bunch of terms and stuff. I'm trying to keep it simple. See how we have these down to close candles, two down closed candles, and then we took days and days and days, a couple of weeks before the market pushed higher and closed with this candle, closed above that high. That makes this an order block, folks. And you see how we gapped up on Friday? That's because we got those bad job numbers that came in for the US, and that pushes the dollar up higher. And I'm looking maybe next week we may see a pullback to close that gap and then push up higher. There is a fair value gap here, folks, that I would love for the market to hit and take a very a very nice high probability trade to the upside from. I would like to be bullish from that point. Okay, if we go down to the 4 hour, you can see it a little clearly. You see how the market establishes this high here. All right, and you see how it bounced. Why? Because there was a down close candle here acting as support. Price comes into the fair value area and pushes up higher, the daily fair value area. So I really like this. All right. We had a push here, a push here, a sweep of the liquidity there, and then the market says we are comfortable trading at above that high. This breakout area, market broke out, came back to touch, and we may see the market continue up higher. All right. So it could continue up higher from here, but I would love to see the market sweep this low, come back into this fair value gap, and continue up higher. Boom, boom. This would be a lovely trade to take. All right. Now, if it goes up here and sweeps this high, you wait for the pullback then, because I'm pretty sure we're going to see a reaction by the markets. If it goes up here first without coming back down to the daily fair value gap. I hope you hear me. All right. Now we're going to move to the Euro USD, but I just want you to see that once we broke on the US dollar, it's been bullish. All right. And I was for 2 weeks, 2 videos straight. I've been talking about this high, and we finally got a close above it last week. And I said, yeah, we're probably going to be trading toward these highs. So let's go to the Euro USD. All right. And this is the Euro USD here. And let's go to the weekly, and you can see it is the inverse of the US dollar index. All right. And what I want you to see is we had 2 bearish weeks, just like I just mentioned the opposite on the US dollar index. All right, we had two bearish weeks. I was looking for a close below that low. All right, why below that low? Because uh, we had a fair value gap here. All right, we had a fair value gap here. Price created that fair value gap. I was looking forward to for the market to come back into this fair value gap and give me a sign whether it was going to respect it or trade through it. Well, it traded through it. So what happens after that? What happens? I expect I expect the market to treat this as an inverse fair value gap, an inverted fair value gap. Where is it at? There you go. All right. And what does that mean? A pullback. Any pullback? I'm looking for the market. If the market pulls back to this area, I'm looking for the market to act as resistance and push market down to this liquidity point down here, this low, and further. We'll see how this market goes. Um, uh, uh, but I want you to understand that I look at this. Where is it at? Well, I look at this move the same way I look at it on the US dollar, only the inverse, of course. That is an impulsive move down. We have our correction, and then I'm looking for the next lower low. All right, I'm looking for the market to trade towards this low. All right. Uh, uh this is a a rangy market. Look at this from this high to that low to that higher high, a pullback into that. All right. We did not take that low yet, but we did not make a higher high off this last impulsive move. This is not, this is looks like a correction to that move. So I'm looking for that. I'm looking for this to act as the draw on liquidity. All right. And this is the beginning. This is the market structure shift here. I'm looking for this to be the change in the behavior of this market. All right. Call it a change of character if you'd like. All right. But I'm looking for the market to push up and then continue down. If it doesn't push up, that's fine. It could just take out this low first. There is a opposing candle here for it to find support. All right. So I'm definitely looking for some kind of reaction from that and then take a high probability trade to the downside. That's what I'd like to see. All right. If we go to I'm going to take you really briefly. Last week I went into some detailing, and this was the follow-up. I posted this on TradingView. Uh 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 the pound USD, pound USD. I said, hey, look, I said, the market has a break of market structure here. We are bullish. We've been bullish to get to that point. You can see a higher high, higher low, higher high, higher low, higher high, right? Cool. What happened? All right. This becomes our low. All right. This becomes our new high. And we're trying to get to that swing high up here. This is all internal, all right? Internal highs and lows. We made a new internal high here, and then we have a pullback, a lower low, a lower high, a lower low, possibly, and I said possibly a lower high. I said this is the area I want to watch because why? Because it's in a correction area. It's in correction territory. To what? All right. This high, this low, this low, this high. All right. That's what I'm looking. Sorry, this low. All right. This looks like it's correcting this impulsive move. Lower, low, lower, high, lower, low, possibly a little high. And I said, we need to watch this area. That's why I got the eye there. All right. And you can see what I wrote here. Our daily close below the previous weekly low would confirm a bearish shift in the market and sells would be warranted. Now, I said all of that, did all of that, and what happened? What indeed did happen? Well, I will tell you. Let me clean this up a little bit. What we can see happen is the market. came up, hit this fair value gap here. You'll see that fair value gap on the daily. Let's go down on the daily. We can see it a little clearer. All right. You can see there was a bearish fair value gap. I said, what would not surprise me is if the market uses this fair value gap. I said we could see the market take out these highs and give us a reaction from the fair value gap, and then we could see the market start to push down. That's exactly what happened. All right. And even though I was expecting the market to go down, I said it could take out these highs, push up, and take out the fair value. Go look at my fair value guy. Go look at my video from last week, and you will see what I'm talking about and how I believe that how the market would behave. So what happens here? We took out. We're trading just. Did we get a close here? What I'm looking for is a close. Let me see. Looking for this close to see if we got a close below. No, we didn't. All right, we closed within the fair value gap, right? You can see how price came down here first. All right. And but this fair value gap, I don't see any use in keeping it up here any longer. I'm thinking that it's as good as used. All right. What we're looking at is the low was taken here. All right. And that liquidity low is really important. Now we have an impulsive move down. We have an order block here. The buy up before the strongest sell off, right? What am I if there's a pullback of any kind, I'm looking for price to correct this last impulsive move down. I'm looking at a fair value gap right here. All right. I'm looking at a fair value gap right here. And now one could say, well, what about this fair value gap that the market is currently in? Why are you dismissing it so far? Usually, I wait until a close is going to happen. But for me, that this is more important on the higher time frame because I think it's going to invert. All right, I think what we're going to end up seeing is the market come down, push back in there, and continue down from there. All right, but that's more relevant on the on a weekly time frame. Right now, it's clear to see 1, 2, 3, 4. This was Monday's candle, and these are the rest of this was the rest of the week. I think we're going to see some more bearish price action, and I think we're going to see the market pull back up and quite possibly continue on down. All right. We've already swept that liquidity low here. All right. And but I think because we have a bearish fair value gap, we go back up for mitigation of this bearish fair value gap here. All right. I think we're going to go up for mitigation here. The what do you call this? The displacement past that fair value gap and the closes that we got, I think we should see a pullback and a continuation to the downside. All right, this is an order block, folks, and it comes at a fair value gap of the same on the same time frame. That's going to be pretty significant in my view. All right, tell me what you think in the comment section. But right here, this will be a weekly fair value gap. I mean, a weekly, what do you call it? Order block here. And if we get next week's to close down below that. Now, understand the weekly candle last week closed below the range of the previous candle. And this was an inside bar. This is where you would see a change in the direction of the market here, and the state of delivery goes from a bullish one to a bearish one, in my opinion. So that's what I'm expecting with the pound. All right. If we go down to sorry, if we go down to the Aussie dollar is a bit messy, but look at the weekly. Sorry, look at the weekly. You can see bullish, bullish, bullish. 3 weeks, 3 weeks of bullish activity heading towards this high. All right. So you would think we are bullish, right? We are bullish. No, look at this. Lower low, lower high. Low. Well, I'm doing it wrong. Let me do it this way. All right. This is our swing low. All right. This is our next swing high. Boom, boom. This is internal. That is internal. These are internal to this high and low here. All right. So it's not we haven't broken structure pulling up this high and that high, that low, this high, that low. All of that is internal to the last low and the last high. You understand? Until that high and that low is broken, we're not bullish. We haven't turned bullish until we break this high. We're going to continue bearish as long as we keep breaking structure to the downside. That's it. All right. Now, you might say, okay, well, we had a swing high here. All right. But that is a liquidity sweep here. That isn't a structural break. Do you understand? A structural break like that, a close above it would say, hey, we're heading up higher. No, because we're still within this low and that high. I hope you can keep up with that. All right. Now, from this lower high, where's the next lower low? Right here. What is responsible? Where is the responsibility for that low? What high made that low? Right there. All right. So what does that mean? We got to break this high. We got to break this high for the market to turn bullish. Now, doesn't mean on the lower time frames, all of this bullish activity doesn't mean that we can't take buys and stuff. No, no, we're on the weekly. All right, each candle represents a week. Relax. All right, what you want to see is if this is the high that made this low, then anything in between, when the market starts pulling back up, it's correcting. Correcting what? The impulse to move down, that impulse down. All right. We're moving up. All right. And we're in correction territory. Uh, look here. Uh, this is the 50%, right? This is the 50% line running right through here. All right. Of this trading range. I want to see where is the market going here. This is the OTE levels, right? Between 786, 705, and 618. I'm looking over here to see where would the market find resistance in and turn, and continue that lower low, lower high, lower low. You know what I mean? Where would we find resistance in this pullback? Where will the pullback end? Where's the possibility that the pullback could end? Look at this. Up close candles here, right? You see them. I see them. All right. That is a strong buy up. That is a strong, I did it again. That is a strong buy up before a stronger sell off. That is an order block, folks. We tapped it once here, swept that high into the same order block. There's a good chance. There's a good chance if the market breaks this low, and I'm talking about trades through it, it will represent a market structure shift from bullish to bearish. And we could see the market head towards these lows to make a lower low, lower high, because we are in a downtrend. Does that make sense? Long as this protected high stays protected and we have a new low, we'll look for the correction, and then this becomes the new lower low, and this becomes the potential for the lower high. I hope I didn't sound too garbled with all of that. Okay, so I am looking for next week for the market to continue bearish from here. Now, I'm not looking for a bullish Aussie dollar. Let's take a peek at that daily real quick. Let me clear this market up a little bit. Get out of here. All right. Yeah. All right. Now on a daily closing basis, this this becomes the mark here. You see how we make this low and then push up higher here? Well, I'm going to tell you, this would mark a structure shift on the daily. On the daily, just bear in mind, we got a higher high, a higher low, a higher high. Which one? Right there. Higher low, higher high. All right. We break this low here. All we have to do is break this low. Trade through it. Like where that the arrow, the red arrow extends, we can see the market pull back up into that bearish leg and then down and then down. All right. From where? A higher time frame point of interest, which is sorry, which is this rather large weekly order block here. Okay. So it's mitigating the order block, and we'll see if it continues higher. Could it continue up high, continue lower? If it continues up higher, hey, we still have a lot of real estate to work with as far as this weekly order block is concerned. And it could go up to the midpoint. It could go up to the midpoint and then turn around. We'll just have to see. But right now, after 1, 2, 3 days of last week of being bearish, hey man, there's a good chance we take out this low. Let me clear this up, which is why I have this as a liquidity point that we should be trading towards. Now, there's a bullish fair value gap here. There's a possibility that the market could, continue up higher from it. But what I'm looking for is, will the market respect it or trade through it towards this low? That's what I'm looking at. We'll see. We just have to be patient. There's a lot of room down here for the market to have a full pullback down to this area for OTE levels. You understand? This being the low and the high. Yeah, there's a lot of room in there. So for the market to push down and turn around. So we'll see. We will see. That's what I'm expecting for the Aussie dollar. More downside. Okay. What about New Zealand dollar? You see this? That looks like a head and shoulders. I don't trade these patterns just like, oh, I gotta take a sell here or whatever. Oh, look at the neckline. No, no, that's not the way I trade. But I just happen to remember, just it's obvious. We have a high, we have a higher high, then we have a lower high. This looks like a swing fail. Meanwhile, there is a clearly defined neckline here, if you will. So what are we doing here? What is that? All right. So uh so what I'm looking at here is on the weekly. Let's take a look real quick at the weekly on New Zealand dollar. It's not a whole lot to go into. It's very simple, folks. All right. We are in we are moving downward. All right. You can see just like with the Aussie dollar, we have lower highs, we have a lower low, we have a lower high, all of this noise in between. All right. And then we make this new lower low. What is responsible for that lower low, this high? All right. So lower low, lower high, lower low, lower high. Looks like we are on our way to making a new lower low. That's what it looks like to me. All right. And until price takes out that high, this external high here, until we do that, this is a protected high. All right. We have an impulsive move. Price corrected into it already, right at a higher time frame or a lower time frame fair value gap. All right. Right at OTE levels. And then the market continued down from there. So if we see that 2 weeks of bearish activity, we close below the fair value. We close below this bullish candle here. This what I call a institutional candle because of the size. Only institutional traders can make the market move like that. That's ridiculous. That's a lot of smart money involvement there to make that move. Makes the new swing high here, makes a new internal high, and then we have bearish closes beyond that right here. This is saying the market's heading down. All right, that's what I got. And excuse me, that's a weekly fair value gap that the market traded through here. It used that fair value gap for higher prices. That's when it becomes, you know, unimportant at that point. It was used already. And then you see the market close below that low after that high is made. This becomes our new external high. This becomes the protected high. And you can see that we have two bearish closes below that. We're heading into a bullish fair value gap. But bear in mind, this is in a downtrend, overall higher time frame downtrend, right? So you got to you don't have the high expectations that the market is going to use this for higher prices. You just don't say, well, it's a bullish fair value gap. Hey, we got to take buys. No, no. That's a way to lose your money. All right. All fair value gaps are not made the same. All right. I have a low expectation here for this fair value gap. If it does continue higher from here, I'll be looking for this as my liquidity draw. Okay. Because what we could get is this and then this. All right. But because there was a pretty nice size move down, it has to be corrected. And being that this is our external high point here, the what do you call it? The protected high. All right. And you see the low that it made, it started a pullback. I would wait. I would like to see it reach the 50% of this trading range. It has done that, but this is the OTE levels up here above that 50%. We did not get that. So the expectation the potential that the market could come up higher is there. All right. Make no mistake about it. We can sweep that for liquidity and then come down after a reaction from this bullish fair value gap. So I'm watching this bullish fair value gap and the reaction to it. All right. And what we could see, let me clear this up for you, is either the market doesn't respect that bullish fair value gap and closes below it, which would be a bearish indication, and we can expect the market to continue down lower towards this low, right? If it respects it, we could see the market head back up to sweep that liquidity high there and then start to work its way down to these lows. All right, so eyes on the bullish fair value gap here. Got it on the New Zealand dollar. All right, and if we can break it, if the market can break it, especially with some displacement through it, like you see the market displaced through this high, all right, this is a pretty strong push higher. Can we see a countering one? All right, that's what I'm expecting to see because of the attempt to go higher and the fail of it, and then we close below these lows. I'm looking for the market to go back into that bearish fair value gap here. Come on, man. The bearish fair value gap here and continue down from there like so. So we'll see how this goes. Why is my arrow looking all crazy? Why are you looking all crazy, man? All right. So if we can get a pullback, or if we get a pullback, a reaction from the fair value gap, not going to be surprised, but then I'll be looking at the reaction to the next fair value gap on the daily. Okay. But I am expecting more bearish price action with the New Zealand dollar. I'm expecting bearish price action with the New Zealand dollar. What is the next one? Come on, man. Get me off of this. All right. US dollar CAD, bullish. Look at this. Let's look at the daily. I mean, the weekly. Higher, high, higher, high, higher, high, higher, high, higher, high. We got all these higher lows. I just said higher highs. Excuse me, folks. I'm a little tired. We got all these higher lows, right? They're there for a reason. Even though we only got uh this high broken, swept the liquidity of these relative equal highs here, boom. Then the market drop. Boom, right? That looks like, hey man, we should be going bearish. There's a big old fair value gap here, and the market using that fair value gap to go a little bit lower, but we never took out these lows. Look what it did here. Came close. Here's the low. That low is protected. That's why. All right. And then the low was created by this high point. Once the market breaks that high, boom, and then protects that low, as you see here, you got to say, uh-oh, we're heading higher. That's all there is to it. All right. A break of market structure has happened. Look at this right here. Boom. All right. You can use this high. God dog it. Boom. All right. We broke structure. The market closed above that high. We are bullish. All right. We're just above that. We're bullish here. Market made this lower higher, made that low, pushed up higher past it. It looks like we're turning around. Okay. If we would have took out this low, we would have traded through it, then I'd still be on some bearish stuff. I would be on a bearish time, but we're not on bearish time. Look at this. This is a 1 week candle. All right, 2 weeks ago. All right, the market came down. 2 weeks followed of bullish price action. You see that gold bar there, right? You know how I mark my order blocks. I said if we trade past that high last week, to my some where I normally post. I didn't make a video about it, but I had given the forecast out that if we trade above that high, this would create an order block like so, and we should be trading from it. I would expect the market to pull back into this after it reacts from this bearish fair value gap that it just ran into. I would look for a reaction of some kind. If there's a pullback, I would love to see the market pull back to the order block and then continue up higher from there. All right. There's a good chance. You see how strong and aggressive this candle is? There's a good chance we disrespect that fair value gap. All right. And that'd be fine with me. Look how it closed well above, just above the 50% of that candle, the 50% of the fair value gap, the consummate encroachment, if you will. All right. And that usually indicates the market is probably going to disrespect this thing. All right. So in either case, we're going to look at the reaction. We're going to judge that reaction. All right, we may get a bearish candle here, which would indicate a pullback. All right, depending on the length of it, will we get a fair value gap here, a bullish fair value gap? If we get a bullish fair value gap, we can find there's a good chance, a high probability chance that the market is going to pull back into it and then use that to springboard higher. If the market continues higher, excuse me, past this bearish fair value gap, and we close here. All right. When we close here, first of all, that'll be a bullish indication. Once you see the failure of a bearish PD array, all right, I would be looking for the fair value gap that is left for the market to pull back into and continue higher. That's all. That's all. That's all there is to it. We get a pull back down here, that would be optimal. If we get a fair value gap developed here and the market creates a new candle, breaks the fair value gap, we can pull back into that and then continue up higher. But I do believe that the market is going to see higher prices. Didn't even get to the daily, did I? All right, look at the daily. See how far we're into this weekly fair value gap here? Look how far we're into it. If we disrespect it and we turn at the opposing candle, that bullish candle in there, and we turn there, I'm looking for the market to come to the daily, to that fair value gap right there, and push higher. That's it. Does that make sense? Let's just keep it simple. All right. This would be a great place for that pullback to happen. Two down closed candles. This is the sell before a stronger buy, creating an order block. We have good things down here. There's structure in place for higher prices to push up. All right, let's go to the next one. The next one is what is this? There you go. US dollar Swiss. I'm not sure what my time is on this thing, but I think we're coming close to it. All right, so I'm looking at let's look at the weekly. All right. What do I got here? Stop it. All right. So on the US dollar Swiss, right? So the market's been going sideways for weeks. Weeks. This is the weekly time frame. All right. We did have a break of market structure. We have been bearish, making lower lows and lower highs, and we had a break of market structure here. That means we're bearish, right? Until we can turn around. And we ain't turning around. We haven't turned around in a good while. All right. We're going into this this lower low here. As you can see, we've been making lower lows. All right. Up until this point, the market tried to go higher here, and then we see these lower highs, this descending highs here, and then we get down here and we even break that market structure again to the low side. This is a weak market. All right, the US dollar is weak against the Swiss. That this is actually the monthly time frame that I'm looking at right now. All right, if we look at the weekly, do we have something that says the market's turning around? Yeah, we do. I'm glad you asked. In this weekly, these weekly candles here, the market range to the side. We weren't getting higher or lower, right? But we did get a sweep with this low here of these previous lows. We did get a sweep here, and we haven't gone lower than that. All right. Market comes down, market comes down, market comes down. We're making successive lower highs there. All right. Descending highs there. And I think this is going to be our draw on liquidity. Look at this low candle. This lower closed candle here. This is the sell before the stronger buy. And we've seen it how many times already with the other markets. All right. So we have two very strong weeks of closes. All right. And we form the order block here. How many times have I shown you this in the other markets, right? Same formation, same formation. Okay. All right. So what does that mean? All right. A pullback to this, and this would make a very strong buy. That's all. And how would I look? Where would I look for the market to stop this pullback, as you said, Mr. May, Mr. RT Money? Okay. Now, what I want you to see is we have these down closed candles, and we have the pull up. This is where the order block begins. All right. I got the Fibonacci retracement tool from this low to that high, to this high rather, and I pull it out to the side here. And we're looking at those numbers right here. This is our OTE levels. If the market pulls back to these levels, this would be a high probability trade to the upside. It doesn't have to pull all the way down there, but if it did, that'd be best, because it'd be anything below that 50% of this trading range is where I want to be, where I want to take buys is below the 50%. Where I want to take shorts is above the 50%. All right. So I would love to see a pullback into the order block, the weekly order block here for a high probability trade to the upside. Will I take shorts? Sure. You can, for you day traders, take your shorts as the market pulls back. Yeah, you can. 15-minute, 5-minute time frames, no higher than the 15-minute time frame. All right. What is the market doing? Heading towards these descending highs here for liquidity. That's where we want to we want the market to come back and push up into so it can sweep this liquidity here. Okay. And that's where I'm at on that. We took this high. We took the liquidity high here. I would love to see the market pull back down. There's a speed bump, a bearish fair value gap here. I would love to see the market react to that just to get it down there so that we can push up higher. All right. Who else are we left with? US dollar JPY. All right. Let's go to US dollar JPY. If we go to the weekly, you can see bullish week. Bullish week. We had 2 weeks of bullish price activity. The US dollar's outperforming marginally, outperforming the 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 yen towards this high. All right. Let's step back a minute. I want you to see that the market has been moving sideways for months. Okay. Go to the monthly, you can see it pretty clear. All right. And somebody just called me, excuse me. So, but these lows are pretty defined. This low, we swept that, we sweep that low, we sweep that low, but we're not making higher highs here. We're not making higher highs. We made one break of market structure as the market was bullish here, bullish, bullish. All right. And this became our external low. This became our external low. This is actually the external low. I'm sorry, the swing low. But these lows here became the sweep targets for liquidity. All right. And we have not broken that high yet. Do I expect to break that high? I do. Why? Because it's been bullish for 1, 2, 3, 4, 5 months. This is bullish price action. That's something that you just can't ignore. We broke through a bearish fair value gap here, and that's a bullish indication itself. That's a monthly candle. All right, that's a monthly candle. So, that's a pretty strong bullish indication. We're heading towards this high. All right. We did not sweep this low. We have not swept that low. We have not swept that high. This is our external points. All right. We're heading towards the external points here. Okay. Right now we're heading toward the high. We're heading toward the high one for the liquidity. All right. We've broken structure here, but this is this is a range, and in ranges, you can't expect your technical analysis to hold 100% because the markets can change direction at any point. We get up here, we go a little bit lower, we go a little bit higher, we go a little bit lower, we go ahead. We can turn around and hit back down. All right, because we're still in this range. So we have to be very careful. I like the way the market is moving right now, bullishly. We'll go down to the daily and take a closer look, and you can see this is why I have this little area dark in a box, because we are moving sideways. Make this high, we pull back, we fail to go any higher, we fail to go any lower. We break this internal high here. All right, but we still have that high intact until Friday, where we had a close above it. This is my indication to me. This is an indication to me that prices are going to go higher, especially after last week. A bullish week. And I like the fact that we have an extended move to the upside to break this high here and take out the swing high. So we might have closed marginally, but technically we did close above that high. So I'm looking for a pullback. I'm looking for a pullback, and these ascending lows here, these ascending lows are going to act as uh liquidity draws. All right, little draws for liquidity. If we pull back into it, I would love to see the market swing down lower, sweep this liquidity before it moves all the way up. I'm looking for a pullback and then up. That's what I would like to see. Is there a possibility? Oh, sorry. Is there a possibility that the market just says, yeah, I'm just going to continue up higher from here? Yeah, we could see a candle push higher here and leave a fair value gap here. This might be a breakaway gap. We never know. But if we see the market continue up higher, it'll be less likely that the market's going to sweep back and come back into the range to sweep liquidity and continue up. We may see the market close above and then hit the top of the range for support before going up higher. Do you understand? Does that make sense? We'll see the breakout, a retest, and then continue up higher. So I'm watching the way the next candles form. All right. Now, so I'm expecting, I'm bullish in the US dollar JPY. All right. This isn't my favorite market. There are stronger markets to buy, to get into. But this is the expectation I have as far as bias is concerned. I'm bullish in this market. All right. And that's it. Now, I want to make sure you're reminded of something. On the 14th of January, the 14th of January, excuse me, the Supreme Court is going to render its judgment on the tariffs. All right, and if the U.S. is required to pay back those tariffs, that's going to cause all kind of volatility in the market, and we don't know which way things are going to swing. But it can't be in a good way. It probably won't have a positive impact. But if they sustain the tariffs, meaning that the tariffs are justified as far as they're concerned, that probably is going to put people in a a risky mood, and turn the market environment into one of risk as opposed to running towards safe havens and pushing the dollar up higher. We'll probably see the opposite happen. So January 14th, that's Wednesday. Be careful. All right. Let's see what the news brings. I hope you enjoyed all of the analysis I gave you today. If there's any question on any of the markets that I covered, make sure you ask in the comment section. All right. I love to uh, you know, get the feedback from my people, from my viewers. All right. And if you see room for any improvement or something that I did not include, you make sure you hit me up in the comment section and let me know. I'll respond. I respond to all the my viewers. I respond to every last comment. Period. All right. Make sure you hit the like button. Make sure you hit the boost button, and if you got some analysis you want to drop off, make sure you leave a link for a chart or something, a properly marked up chart, and I'll give you some feedback on it. All right. I'll see you in the next video. I still have to put out videos for gold and the indices and even oil. All right. So, and the metals, you want to see the metals. All right. It's going to be real important. I'll see you in the next video. Thank you for watching. May profits be upon you.